Hello, great to have your company on Small Caps. I'm Peter Capsanis. Well, how many companies do you know that can boast posting 4 consecutive quarters of positive cash flow, apart from the big banks, that is? Well, Frontier Digital Ventures, which also trades by ASX code FDV, is one such company that has achieved consistent growth. FDV is a leader in online marketplaces with a particular focus on property and automotive verticals and general marketplace websites. To tell us more, I'm joined by company founder and CEO Shaun Di Gregorio. Shaun, all the way from Dublin, good to have you on the show.
Good morning or good afternoon or good evening, as it might be where you are.
Well, you're definitely, it's definitely afternoon, and you're definitely escaping a Western Australian heat wave as we speak. So you stay cool there in Ireland, Shaun. So the company, a bit of background first. The company is headquartered in KL. You have also an office in Melbourne. I know we've asked you this before a few months ago, but by way of background, give us a quick overview and recap on FDV's story, Shaun. What do you do? What's your mission?
Yeah, so we operate online marketplaces in emerging markets. So put simply, if people watching are familiar with realestate.com or car sales, those types of businesses, they'll know the idea of consumers going online to search for houses and cars. We take that business model and we've rolled it out into about 20 emerging markets across 3 regions. Our big focus is helping consumers in emerging markets find a trustworthy, certain, reliable way to access automobiles and houses online, and then working with advertisers, working with property agents, working with car dealers, property developers, car manufacturers, to give them the best way to sell their stock, which is online. And we're very familiar with the model in the developed world, and it's been around a fair while now. So it's not new in emerging markets. We're of significant size, but our mission is to really help consumers find big ticket consumer items, work with the industry to help them shift more of their product and make it a better experience for everyone when searching for houses and cars online.
Was it a gap and a divide you realised that could be narrowed, and obviously was an opportunity to consolidate on?
Yeah, I mean, my background is in this industry for a long time now, about 20, almost 25 years. So, we'd seen the model evolve in Western countries and how it had improved consumer experience, how it had improved the transparency, how it had made transactions a bit faster and a bit more reliable. And we just saw an opportunity to take that to emerging markets. A characteristic of emerging markets is they do historically have lacked trust. There's been uncertainty when searching for things like houses and cars. And what these online platforms have done is really formalized to the market. So if you can imagine, being in an emerging market, going back a few years now, you're searching for a house or a car. It was for the brave. Before the online platforms came along, you were dealing directly with individual agents or individual car sellers, a lot of complexity, a lot of risk. And all of a sudden, these online platforms came along, and for consumers, there was an intermediary between them and the seller, which they trusted, and it gave the whole transaction certainty. And certainly from an industry perspective, it made their ability to market themselves and be verified by an independent sort of third party, an intermediary to consumers. And that was what we were trying to help people do. We were trying to help people find houses and cars more reliably and with greater trust. And we're trying to help the industry, I guess, formalize and present itself in a really professional way so that everyone benefits from being able to conduct these transactions. So it was a real obvious problem in the market. Our platforms go a long way towards solving that. But as you can imagine, it's evolving very rapidly. So we're not just talking about searching for houses and cars. We're talking about facilitating the entire transaction in some markets now. So it's rapidly evolving from the initial problem and solution that we'd rolled out.
Yeah, wow. Okay. Well, that sounds quite advanced compared to some of the platform's capability here in Australia. So when you talk about emerging markets, we're talking Africa, Asia, South America. Is that fair?
Yeah, so we've got 3 key regions that we focus on. The first is Latin America or South America. We're in about a dozen countries in that region, and that has its own brand and its own sort of grouping of those companies. We've got a bunch of companies that service some of the North African markets, so across the top of Africa in North Africa there. And we've got another group of companies that are all located in what we call developing Asia. So not Japan, not China, but more Southeast Asia and some of the developing countries. So three real clear areas of focus for us: Latin America, MENA, and what we term developing Asia.
Yeah, okay. All right. So let's hone in on some of the more recent news. 4 consistent quarters of positive cash flow, operating cash flows I mentioned in my intro, Shaun. Is that a result of the company's deliberate strategy in focusing on those emerging markets?
Oh, look, it's a function of a lot of hard work. It's an outcome of a strategy that we put in place a number of years ago, and that was to identify these businesses in emerging markets, to invest in them, to help them grow. And while you're growing, a lot of these companies require cash. So typically, you tend to spend more than you're earning. Over time, as you become a market leader, you become very dominant in the market. You have the ability to generate not just profits but cash, and it's been a really significant milestone for us to take our group of companies, which are all fairly young, get them operating, get them as leaders, make them profitable, and then, of course, the big hurdle is for them all to be cash flow positive. So all of our three regions stand alone are cash flow positive. Our entire group, of course, as you mentioned, is cash flow positive. So it's a real benchmark. And certainly today, when capital is hard to find in the markets, you want to be businesses that are generating cash. So we think we timed it fairly well, where we'd grow in the businesses, we've invested in the businesses, and now they're leaders, they're profitable, and they're generating cash. So the big three financial markers: revenue growth, profitability, and ultimately being cash flow positive. And to do that 4 quarters in a row is not just a fluke. It's deliberate, and it's been a lot of effort by everyone in the business.
I just want to not necessarily digress, but I want to sort of a bit more specifically. You say in terms of Asia, I imagine the Philippines is within your circle of influence. Is that right?
Yeah, that's right. Yep. We have two businesses in the two investments in the Philippines. Yes.
Okay, the availability of credit and the ability for people to sort of purchase online, etc. That's a market that's sort of taking up and growing. Is that somehow, and obviously since COVID, COVID has helped fast track certain markets or emerging markets, as you like to call it, has allowed it to fast track the ability for that explosion, internet transaction, etc. So has that worked or dovetailed into what you're providing and facilitating?
Yeah, COVID was, I think we're going to look back at COVID and scratch our head on many levels, but certainly one thing it did was it ingrained online purchasing into every country because no one had a choice, right? So even markets that were maybe, cash societies, or where credit cards or debt wasn't as evident or available, all of a sudden we're all sitting at home, we have to buy online. And that helped shift consumers even more. I mean, they were certainly doing it before, but that really um, almost put an end to the days of not doing stuff online. So these markets are all doing it online. And one of the interesting things in emerging markets is this trust issue. And there's often mistrust when making purchases. And online gives people a lot more certainty now, to the point of people making it habitual. It is now. And the other interesting part, as you mentioned, is just their access to things like credit cards or even debt or consumer lending to enable purchases. And what we've found in our markets is that certainly in the automotive space, there's good access to things like credit for people now. As long as you've got a job, you can basically borrow money to buy a car, and keep in mind that a lot of the cars are probably at lower price points. The property market's really interesting. Some of our markets, Bryn, are still more cash based, or less leveraged, or less exposed to debt. So it's a bit of a mixed bag. But that's the charm of emerging markets. All of these things are happening now. The credit is becoming available, debt markets are becoming more sophisticated, and it's giving consumers not only the ability to go buy a house or a car, and at the same time, we've all moved online and we're all doing it online. So from where we sit, they're two nice dynamics that are converging. So people very much doing stuff online, whence maybe a few years ago they weren't, but also having the financial capability to buy a car or to buy a house using debt or some sort of credit is much more available now than it was historically.
All right, the company's seen significant growth in the Latin American market, especially in transactions revenue. We were talking about that just a moment ago. Can you talk to us about the numbers? Are you happy to share firstly, and what do you think were the main drivers behind this?
Well, that's, the charm of being listed, Peter, is that everything's on the record. So certainly all our numbers are there, and the businesses in that part of the world grew really well, was sort of 20 back to 20+% revenue growth. This time last year, the world economy was pretty tough, and a lot of our markets were doing it tough. They've recovered really well, particularly in Q3 into Q4. So we finished the year well. Our business in LATAM grew, I think, by around 22% thereabouts, profitable, cash flow positive, and a big part of that is still the core business, which is the classifieds business that everyone's familiar with. But increasingly, it's saying to consumers, hey, don't just come here and search and discover, stick around. We can help you buy the property you've identified. And what that means is working closely with property sellers, so property developers, for example, and saying to property developers, hey, all your buyers are in our environment, they're all on our platform. Why don't we work much more closely? And why don't we actually just rather than just send you a lead or an email, let's send you a really qualified buyer. We'll connect you more deeply, and let's help you facilitate a transaction. And more people are going down that path. So it's evolving from that search and discover behavior, which we're all very familiar with. You go onto realestate.com or car sales, you search, you discover, and off you go. It's keeping consumers in your environment and helping them do the transaction, helping them connect with a seller, and helping the seller service the consumer to a fuller extent. And of course, if you can do that, you can charge more fees. And at the end of the day, that's our bottom line business. And it enables us to be paid some of the success commission now. So this model has always been predicated on advertising revenue, and it will continue to be the core of the business. However, more and more of our focus, more of our future, more of our revenue is coming from helping the entire transaction take place. And that's where a seller is quite willing to pay us all or some of that transaction commission, or what you might term a success fee, once the house or the car is actually purchased.
Okay, and your Latin American market grew, as you mentioned, there by 20 or 22%. Overall, how much did the business grow?
Around that mark as well. So we're divided between our consolidated entities. We have a couple of equity accounted businesses in Pakistan, which make our statutory accounts always interesting to read. But our full year growth was really healthy. More importantly, I think we've been able to, throughout the course of 2020, back half of 22 and into 23 calendar year, was also make sure our costs were kept under control. I think a lot of businesses over the last 18 months, especially if they were burning cash or they weren't profitable, really needed to address their financials quickly. And some were able to, some have not been able to. If you've been able to, like we have, you've now got a really contained cost base. We're seeing our regions now return to better revenue growth, which means you get greater profitability and greater margin. And that's what the markets want right now. They want businesses. They have a legitimate business model that are going to generate revenue and generate cash.
Yeah, it was probably a nice segue because I was going to ask you that, you've focused your efforts in more recent times on cost-based optimization and regional rebranding, and across, all those three regions in Asia, Africa, and South America. So, what was the idea behind this, and what's been the impact of these initiatives? I guess you kind of turn around and say, well, positive cash flow for the fourth quarter.
Yeah. Look, yeah, if you had to describe it in 3 words or less, I'd say, positive cash flow. But essentially, these business models are designed to be profitable. They are very good and very profitable when you get them right. And there are really many examples that people can think of in Australia and Europe. And we're simply seeing that model evolve and the same sort of behavior of the businesses in emerging markets. And that means getting to profitability. It means being a leader, it means having most of the market. It's having people rely on you, and then you want to flick the switch and start to generate some value from the investing you've been doing over many years. So for us, we were always aiming to get to profitability. It wasn't a function of high inflation or interest rates in the last 18 months. We were always targeting sort of around about now to get all 3 regions to profitability, and they are. LATAM's a great example. They've now got strong revenue growth, strong profitability, and strong cash flows. And at the end of the day, that's kind of what our investors are looking for. And I think we've timed it really well. We've reached a period where we are profitable. We are generating cash at a time when the markets are saying, hey, I could put my money in the bank and get 5%. Why would I give it to you? Why would I buy your stock? Well, you can buy our stock because it's going to grow and you're going to get a return. So no coincidence, very much part of the longer term strategy. And I will say this, very much an expectation of the model that we operate. Online classified marketplaces, when run well, are good profitable businesses. And we think we've got some good profitable businesses.
You've mentioned some of the groups or the platforms. You've got three. You've got LATAM, you've got MENA Marketplaces Group, and FDV Asia. Just for anyone watching at home or listening at home, just so that they're on board with what we're talking about. So those three different platforms with, I guess, the subgroups that sit within them. Let me ask you, where's the growth? Is it across the automotive, the classifieds, or the property? What steals the show?
Oh, look, our if you had to force rank them for us, the property vertical is the most valuable and it's the biggest, and the fees are the most, and there's lots going on, and it's a massive industry. So if you can get a little bit of that, you're going to do pretty well. Automotive, structurally is similar. The value of the item that consumers is purchasing is obviously less. It's a car, not a house, but they're probably purchasing cars more often, so you get more volume through the automotive piece. And then the general marketplace is a nice way to have a big audience come look at your verticals. So we've got a couple of general classified sites and they generate big audiences, which are great for pointing those inquiries and leads through to your advertisers. But property really is the one that you can do very well in. Automotive's equally structured or structured similarly, and it can work really well. But for us in all of the regions, that's sort of the order in which we have our focus. Our regions are set up that way so that we have a sort of a tight geographic focus. When we were starting the company and investing in emerging markets, we were investing in a lot of different companies, and over time they very naturally fell into those three geographic regions. We've got a very defined group of companies in South America, very localized group of companies in the MENA region, and similar with Asia. So operationally, it makes a lot of sense for us to have those three regions. Strategically, it makes a lot of sense to group them together. Latin America, again, great example where it's one language, it's all Spanish. And having that group of companies under the 360 LATAM banner is a great way to promote that business, that standalone business to investors in that part of the world. So they understand those markets. So we're trying to brand ourselves, I guess, three ways. And we started out as FDV, everything was FDV. Now we've sort of spliced our portfolio of companies into three mini FDVs and named them or branded them with a more local identity. And I guess it's a good way of trying to structure your business for future growth and for future value as well. We know that the businesses in LATAM are going to be really interesting for investors in that part of the world. Same with Asia rather, and similar with MENA. So it's about really localizing your presence. We're based in Kuala Lumpur. We don't do any business in Malaysia, so we're a little bit removed from that. So we are able to look at the three regions and say, hey, let's set up three really regional businesses and see if we can, multiply FDV 3 times.
Let me ask you, in terms of the transactional component within your platforms, are we talking to the extent where people can buy buy and sell properties and cars through your platforms?
Yeah, so just for clarity, we're not trying to replace property agents. We're not trying to replace car dealers. They're our customers. What we are trying to do is help them do more of the transaction as efficiently and quickly as possible. So if you think about a property developer, they do best when they're shifting a lot of their volume in good, quick time. So if they can shift half of the project in 30 days, guess what? They get good prices for that inventory. So they're about time and volume, which equals price. And for us, we simply say, hey, you still need to sell it, but we can create marketing campaigns. We can target consumers using algorithms. We can create chatbots to chat to consumers who are unsure. We can do a whole lot of tech innovation, which is where all of our focus is. It's how you can innovate using tech to make the transaction occur faster, at a better price for the seller, and in a more certain way for the buyer. So we're very much about facilitating. So yes, a consumer can come to our site, they can search, we'll help them connect with the seller. We'll basically sponsor the process through to the point of transaction. And
Okay,
that's where we
that's
value.
well, that's a great value add. Obviously, bearing in mind the trust factor that you mentioned earlier, the the portals and the platforms here in Australia, for example, they don't go to that to that extent, do they? You know, your car sales or your marketplace or your real estate.coms. It's clearly window shopping, but we don't actually get to transact. So why do you think it works in the regions you're in?
Yeah, it's a good question is to say why don't you need it in a place like Australia? You don't need it because there are really enshrined legislative protection for you. There's rules of the game. There's recourse if something goes wrong. There's heavy regulatory requirements on property developers or sellers. On the real estate industry in Australia, for example, we've seen in recent years much more regulation around, price quoting and things like dummy bidding at auctions. The whole industry is under the microscope. Now, take that to an emerging market. None of that really exists. So it's a little bit what you might call historically loose and fast would be a generous term, but there's a lot more risk when you're trying to buy a car. If you can imagine, you're in downtown Lahore in Pakistan and you're going shopping for a secondhand car before the internet. You literally went to the guy on the corner who had a little shop, or you bought privately, and the paranoia that would exist around, well, who do you really own the car? What's its real history? Does it have registration? Does it have a service book? All of those things that were embedded in emerging markets as being high risk. We've removed a lot of those and made it more certain. And where that's just led us is that people trust us now as an intermediary. So in Australia, you don't really have to trust or rely on realestate.com or car sales. You're trusting the system. In emerging markets, you're trusting us to help you make a secure purchase. You're trusting us to have vetted the seller. Now we're not. We're almost like a proxy for the government in that sense, where we kind of regulate how people search, discover, buy, and sell houses and cars. So I'm not trying to be grandiose and overstate our role. I'm trying to illustrate, I guess, the difference from a developed country to an emerging country, and that is the rule of law, the recourse, the legal protection, and the process is just not as secure. So we step in and play that role, and people in Australia still, can trust the local real estate agent. So lucky them.
I guess the other thing here is, I guess, which is probably worth touching on, is the data and the data
Yeah.
collection that you would be exposed to across all three markets. I mean, that's got to be of some value too, doesn't it? In terms of
Yeah.
trend identification.
Oh, absolutely. To the extent where in a lot of our markets, we probably have better data on say, for example, sold properties, right? We probably have better historical data than a lot of government. And often they'll come to us for information about price trends in housing and how that might feed into things like inflation and ultimately monetary policy. So we are now actually in possession of probably more data of a higher quality than many of the countries in which we operate local authorities. So it's a really interesting position that you're in. And I guess from our perspective, this goes to the trust premium that we can command in these markets. So we're not only trusted by consumers and sellers, we're actually trusted by a lot of the institutions that we should be relying on. So it's a really interesting role that you play. It's one that's probably emerged not as a deliberate strategy, but by as much as being the leader and just continuing to collect all of this data. And you can use that in really interesting ways. So when a property developer comes to us in some of our markets, and LATAM's a good example, they're now coming to us and saying, hey, you've got all the data. Can you tell me where I should do my next project, how big it should be, what sort of properties I should build, what price point I should market them at? Oh, and by the way, can you help me sell them as well? So we're now heading down this path of being a source of information for developers and government and other in making pretty critical decisions. Now, we're not necessarily in the business of data, but it has been a function of our role in the market. And we're now in a position where we are being sought out for really critical data on significant decisions by both the industry and in some cases government.
Well, that's a very important asset to have, I guess you could say, and a marketable one and a valuable one. So, look, we'll have to wrap it up soon. But before we do, Shaun, as FDV enters a new phase focusing on earnings and cash flow growth, what are your main strategies that you're implementing, particularly in the classified sector?
Oh, look, I think for us, Structurally, we think there are more tailwinds than headwinds heading into 24 versus, the back half of 22 and 23. So for us, it's really the benefit of a global macro setting where interest rates are falling as inflation abates. So that's really good for us,
Mm.
right? If you're buying or selling cars for a living, you want rates going down, not up. So fundamentally, that's good for us. For us, it means continuing to focus on providing advertisers with the right set of products and tools to target consumers. It's making sure consumers get the right experience and continuing to build that core classifieds business. But on top of that, it's investing in product, it's investing in tech, and investing in innovation so that we can actually help consumers make better decisions when they purchase a house or a car. We can help sellers move their inventory faster at a better price, and then everyone does better. Purchasers are happy, sellers are happy, we're happy, and our investors should be happy over time.
You're a listed company, as you mentioned. Why should anyone listening or watching right now, uh, why should they invest in FDV? Obviously, you've got the good track record there of 4 consistent quarters in terms of positive cash flow. But what's the takeaway message you'd like to impress upon them? In terms of when they're thinking for their next, prospect, if you will. Why
Oh,
should, why should they
it's
consider FDV?
it's investing in emerging markets over the medium to long term. It's investing in the two largest items that people buy. That's a house and a car. And it's investing in a means of connecting consumers with the sellers of those products in rapidly growing countries. It's doing it with a group of companies that are market leaders, which is critical. REA, car sales command a premium because they're market leaders. We're market leaders in all of our countries, and we've got a really experienced team. And people, if they Google me ever so quickly, will find out that I spent a long time at the REA group. I ran the iProperty group, and I've been on boards and run a lot of these companies successfully before. So we think we've got the mix right. We think there are more macro tailwinds heading into 24, and we've got a great group of companies that are market leaders doing really cool stuff in emerging markets.
And just one more, any other emerging markets you're focusing on, or is it just your Africa, Asia, and Latin America for now?
Just for now, I think is the critical comment I would say on those regions. We're always looking at M&A, but frankly speaking, at the moment, people are in just operational excellence mode, and that is make sure we're executing well with the companies we have now. And if opportunities come up in the future, wonderful. We'll obviously look at them, but we're very much about making sure what we have is on track, is growing, is profitable, and is generating good returns for investors.
Well, Shaun Di Gregorio, CEO and founder of FDV Frontier Digital Ventures. You're sitting in central heating in Ireland. I'm sitting in here in oppressive air conditioning here in Western Australia. It's two worlds, isn't it, really? Thanks so much for your time today and sharing the company's insights. And no doubt there'll be more news just around the corner as 24 continues to roll on. But in the meantime, thanks for joining us on Small Caps today.
Been a pleasure. Thank you, Pete.